Welcome back. Well, the equity market has quietened down, but let's train our eyes now on the commodity markets. We have Manisha joining in. Manisha, so tell us, what's the headline today? What are you watching?
Well, I'm looking at metals for a second straight day. The kind of gains that we saw yesterday is not what we are looking at today. But the important point is that we are still trading on the higher side, and we still are at around multi-week to multi-month highs. So overnight markets have seen steel prices gain up by a percentage point, and with that, we're trading at a 3-month highs. Good gains coming in for nickel as well after a very long time. By the way, it's a percentage point higher at a 6-week highs. Iron ore prices are your gainer, by the way, because in Shanghai, in US markets, we've seen very strong gains come in for this one. And overnight has been yet another 3% of gains, and that has taken the iron ore prices to a 5-month highs. Other metals also have seen a spillover effect because of that. So you have zinc and aluminum prices gaining 0.5% per piece, and 3 to 4 month highs coming in for these as well. It's not just about the base metals and the ferrous metals, but we also have seen the precious metal prices gain up, by the way. So if you look at platinum, that was at 2.5% on the higher side, and near 2% of gains coming in for gold and silver as well. So while we are trading very close to multi-year highs in case of platinum and silver, gold prices hitting $3,400 an ounce is a 5-week highs coming in for this one as well. Well, the metals are supported because of one point, and that is the dollar index, which has slipped below 98. That clearly has been supportive. And then traders are pricing in a 60% chance of a rate cut for the month of September. That also seems to have given a new lease of life when it comes to many of these precious metal prices. For industrial metals, it all comes in from China. Remember, the economic data that we've seen come in from US has been positive. And from China, the construction of world's largest hydropower dam in China has begun. And China has been putting out statements and updates onto that, and that has been supportive. Well, to tell you, the largest dam is estimated at a $167 billion, and a lot of steel, and that means iron ore and nickel, and then construction, when it means that, would also need other metals as well. So this is going to require steel and various other metals, and that has been supportive. In any case, China has said that they will continue to issue more of such construction projects. They are looking to reform industrial policy to align to their overcapacity, and a Chinese stimulus measures is what the street also is awaiting for. So all of those factors very, very supportive for the metal prices going forward. What the street will now also want to watch out for is the EU-US trade negotiations in this week, if any final statements come in from that. As of now, we're working with 30% of tariffs that could be slapped on European Union. And then it is also about the ECB policy meeting, where the expectation is that the interest rates would be kept steady at 2%. And finally, the US Fed policy next week, well, it's not going to be changing anything in interest rates, but any guidance statements from Jerome Powell is what the street will react to.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. On the other side, Lata is going to be speaking with the management of UCO Bank on the back of their first quarter earnings. Stay tuned.